Hello, welcome to BTI's Market Outlook and Client Service Review for 2021.
Needless to say, it's been a wild year. There's a lot to cover, a lot of changes in the market. In addition to all the COVID-19 and pandemic changes, we want to cover as much of that as we can today. So in order to do that, we've set up a couple of ground rules to make today smooth and effective. First of all, we have a very large crowd today. We're just delighted and we're excited that you could all join us. By the time we're finished with the intro here, we're expecting somewhere between 1,400 and 1,500 people watching us today. Unfortunately, with that size crowd, we can't take live questions, but please send us your questions at btiwebinars@bticonsulting.com, and we will respond after the session. We are recording today's session for your use, so that will be available for tomorrow. And please tweet along with us at BTI Market Outlook. I am Michael Rynowecer. I am the president of the BTI Consulting Group. I also am known as the Mad Clientist and blog at the Mad Clientist. We talked a little bit and gave you a preview of what we're going to talk about today in this morning's post. And really what I'd like to do is take this opportunity not just necessarily to welcome all of you, which certainly I do, but I think we have to stop and look and think about whether we've extended a welcome to all of our clients, and especially the new clients. There's a tremendous number of new clients, new individuals, top legal decision makers, associates, direct reports that have turned over the last 12 months, and that is causing as much market havoc, as much market chaos, as much market opportunity as the pandemic. But of course, it doesn't get kind of the airplay that the pandemic does, and perhaps deservedly so. This is typically an under the radar activity. If you think about your clients, so think about a group of 10 to make this easy, I'd like to go over the different kind of changes that have happened and the impact that that might have on how you're thinking about your clients, and more importantly, on business development. So the first part that I think is most important is 30%, it's actually 31, so I've rounded a little bit here, are new to the CLO role as Chief Legal Officer, whether it be general counsel, whatever the title is, they are in charge. They are running the legal department. This is one of the largest, if not the single largest change that we have seen in the 30 years that we have been tracking these kinds of markets. And this will change a client's, decision making about which law firms they want to hire, which ones they want to keep. But that's only part of the picture. They want to know kind of what their own landscape is within their companies. How are they going to manage the mandates that they've gotten from top management? Most new top legal officers get some kind of mandate, whether it's we want to settle more, we want to be more defensive, we want to cut costs, we want to defend our proprietary rights, whatever it is. They rarely come in without a very specific mandate. So if that mandate is different, then we need to understand what that is, or we're likely to be out of sync. They're probably the hardest to gain client satisfaction from. And what they find helpful is the law firms that help them on board, that give them what one of these new CLOs described to me as situational briefings, like what are they working on, what are they seeing? And they really like those because not only does that bring them up to speed, but they can add kind of a new perspective. They could add their mandate perspective, what they're trying to do. And then finally, they really want to share their goals, their objectives, their mandates with their outside law firms because they know they can't be successful without the right outside law firm. The challenge for law firms is knowing who these are and then reaching out to them. In one of our client interviews we did fairly recently, the top legal officer of a fairly major pharmaceutical company said, I've been in my role 11 months and I have not heard from anyone in my top 3 law firms that we spend money with on terms of a visit outside of the scope of just the matters that we're working on. So this is a real opportunity to extend a hand, to make yourself known in a new way, to perhaps rebrand yourself, but more importantly for yourselves, discussing the mandates, the priorities, and what they're trying to do is going to be in your own self-interest and a key to business development, understanding that this is almost a third of the market. Now, if you think about 10 of your clients and that 3 of them have changed the way they're going about managing their legal affairs and could be at risk, that starts to add up. If you add up the fees associated with that, that can be a lot. What's also interesting as we go through this is one of the things we found is that in looking at it, we found that 35% of the people that have been hired, that is the new CLOs, are women. That is up from 26% last year. So it's certainly not where it needs to be, but that's a big improvement, almost 1/3 more than it was last year. The other thing that I found interesting is the level of experience that these individuals have across the board. This is both the men and the women. They have 21 years experience coming into the role. So that before they got here, they'd been in-house or at a law firm for somewhere right around 20 years. Now, what's remarkable, even more than that level of experience, is last year, that number was 17 years. So they're bringing almost 1/4 more experience of their careers, and they're kind of makes them more demanding. They bring a little bit more experience perspective, and they're looking for a little bit more engaged in dialogue because they have that perspective. So when you're looking out into this world, you're finding more women, you're finding a more experienced chief legal officer, and that demands kind of a different behavior set. And they're also, tremendously sensitive to who's pitching. Because they have this much more experience, they are more articulate many times in what they want and what they want to hear. So as you're developing your pitch, knowing what they want, maybe because you've done the onboarding, because you've had these meetings, make it easier for you to target those very specific initiatives. Now, the next group we're going to look at is the 40% of clients that have been in their role for about 3 to 5 years. And this group is kind of in the sweet spot right now. They are the most satisfied with their law firms. They have kind of established the relationships that they want to establish, because what happens is right about the 2-year mark, many outside counsel will go out and kind of RFP or go out and hire new law firms or reestablish relationships with the firms that exist. And they really have their sea legs in terms of strategy, what they want to get done, and the team that they want to work with. So this is where the dialogue, the ongoing communication that you have with your clients can really set the tone for almost a 3-year run. Being able to kind of position yourself to help clients move along this kind of career ramp that they have and be successful. And this is kind of one of the places where they're most open to it, because they're no longer as worried about assessing their current situation. They think about themselves and what has to happen and where it takes help to be successful, to get to the things that they want to do to kind of meet their own objectives. Now, finally, we've got another group. This 30% have 5 or more years of tenure. Now, what's really, really interesting, first of all, this group was 50% last year. 50%, think about that, half the market. Now it's down to 30%. So we've got fewer kind of in this 5-year category. And there's 2 big reasons. One is we have retirements. We have people leaving the marketplace, leaving the careers, partly induced by the pandemic, but the kind of population was pointing to that. But what's important really for law firms is certainly when their clients leave, but the average lifespan of a chief legal officer is about 6.6 years. So think about that. You've got clients that are at the 5-year mark. The average tenure is 6.6 years. So there's about a 50% chance that they're going to be someplace else in 2 years or less and feed back all the way and become a brand new CLO somewhere else, or perhaps do something else. The opportunity for law firms is A, making sure they're successful and as good as they can possibly be, but they're also going to have a little bit higher chance of what we might call wandering eyes. You know, they're looking out there, they've been in their position, presumably they've been successful. What positions do you know about? Does your firm know about? Do your partners know about that you can share with these individuals just to see if they're interested? Test the waters, have the conversation. It'll show that you're looking out for them. Where do they want to go? How is it, can you position yourself so that you help them and you can follow them to their next gig? How do you kind of help them in a way that they just absolutely want to take you with them? How do you make them successful wherever they go? These are the strongest relationships that are out there. And if you can do that, this is what they mean by clients for life, even though the individual's kind of tenure or career lifespan or job lifespan is only 6.6 years. But this is a real jumping off point. And when they jump off, and we expect this number again to change next year, they're going to be looking out into a marketplace that says, you know, we're recovering from the pandemic, hopefully, or the priorities will be different, and your ability to help them assess that could be the difference between helping them through to their next company or perhaps not. But this would be on the priority list, and each one of these, the first cohort and the third cohort, are the reasons every firm should be having a succession plan for their client and reviewing it with their client, because if you have a good relationship, this is where you may be hearing about it. So this underlying kind of structural change in who the client is and what roles they're playing are as much a factor in anything going on in the marketplace. So knowing who you're pitching to, knowing their tenure, knowing where they are in their career span, knowing where they are in their individual job span is a difference often between a winning pitch, a not winning pitch, a relationship where they don't go for pitches, which would be the best outcome from everybody here. But to help them assess and to help you assess, what we've done is we have put together kind of this overview of where things are in the marketplace right now. And we see 5 major trends going on that are really absorbing the time and the energy of most clients. First, anything and everything workforce. It's coming from all different directions. What we're hearing about a lot, of course, in the news is work from home, how to return to work, how to keep the workforce safe, and certainly those are top of mind issues. But these clients are telling us that there is a string and a continuing stream of EEOC regulations that are coming out of them. They're all different. They're dealing as much as with discrimination as they are with workplace safety. We're finding pay discrimination. We're finding all kinds of things that clients say not only are at the federal level, but for those clients with facilities around the United States or around the world, they have local regulations in each state, sometimes within a state, that conflict with each other. And they are just totally absorbed with trying to sort out what these issues are, how important they are, how they should be responding to these things. And that would be kind of a key conversation and a key place to jump in and help. The clients are primarily interested from 2 perspectives. One is coming at it from the regulatory viewpoint. The other is coming at it from the business viewpoint. Do you know one of those 2 things? If you can go in and talk about new regulations, what's coming, maybe even find the exclusions, or you can talk about the business implications, what others are doing. Both of those are high value conversations. Once you get beyond that, you've got compliance outside of COVID-19, and everything is going on, whether it be, you know, if your clients have touched any PPP money and they're a bank or a lender, especially if they're a non-bank, you've kind of got these issues where they're being looked at 16 ways to Sunday. Cybersecurity is just went on overdrive because of the gigantic move to work from home. And what happens is the biggest single risk that clients see is the unintended breach by an employee. And when you move everybody working from home like we did almost a year ago, in their mind, that's just inviting some kind of unintended breach or some kind of hack. And you've got all these rules that are kicking in while we're in this pandemic. So they're growing, they're trying to deal with these issues. And there's some indication that there'll be more cybersecurity issues than there might be workforce issues. Commercial litigation is still ramping up. It's nowhere near where it's expected to be. And then finally, there's a lot of pent up demand for M&A. M&A, there a lot of companies want to get deals done. They see opportunity. They have good stock prices. They want to use those stocks. The clients want to invest, and they're kind of getting traction now. Deals are getting easier to do. They're more comfortable with them. These are the overriding factors that are sitting over client decision making and client priorities. As they're doing that, of course, they're spending money and they've got budgets. What we've done is we've shown a fairly extensive history here of how clients are spending their money, their budgets. The dark blue is the outside counsel spending. The light blue is the corporate legal department. And to try to make this a little bit easier for you, what we've got is a situation for the first time in a very long time. You can see that there's been an increase in in-house spending and there's been an increase in outside counsel spending. Both of these have increased at the same time. We really haven't seen this kind of increases going all the way back to this period here. And what that preceded was roughly a 3.5 to, depending on how you want to count, there was a good 3 to 5 year run in increases in outside counsel spending to the point where clients were wondering, can law firms actually deliver on the capacity that we need? So past performance is never a guarantee of future performance, but we have a rare situation where clients are increasing not only their spending in-house, but their staffing. They're trying to bring more work in-house, but they know they can't handle it all. So they're increasing their outside counsel spending. They're expecting, a fairly substantial increase in the number of matters. And that, of course, is going to be their biggest challenge. Now, if you look at the blue line on your screen, you can see the number of projected matters for 2021. So if you look kind of right in here, they're going from, these are active matters in some way. These aren't the dormant matters. They're not the slip and fall matters. These are the fairly substantive matters. They're going from 300 to 94.6, we'll call that 300, up to 377 matters by the end of 2021. Now, depending on how you want to count, that's about a 22% increase. Yet they're only getting about a 4% increase in litigation spending and a little bit more than that overall. So the number of matters is far in excess of the funds that they have available to deal with it. That's going to lead to only one thing: a giant increase in the number of settlements, especially in litigation, especially with agencies when they're able to do that. You can see that in 2020, they only settled 38% of their matters. We're kind of close to where they settled in 2019, but the increase in 2021 is enormous. It's going from 38% to 57%. The implication for law firms is, what clients tell us is, the law firms that they deal with typically want to either go defend to the death, they want to settle, but aren't really skilled in communicating that they can do both, and find a way to deliver the services and the matter and the strategy to accomplish both, because they want to settle from strength. So the messaging is, when you're talking to clients, what do they want to settle? How much do they want to settle? how much do you kind of put on the defense front end, and how much do you put into settlement, and how do you show that balance with clients? Involving them in this conversation we find is key, because when they're not part of the conversation, they typically come down on one side or the other in terms of where they think their law firm is. And if you can see so many clients want to settle matters, putting yourself on the wrong side of that equation can put you at risk for future work, for being misunderstood, especially going back to the fact that 1/3 of the market is new. Now, we indicated that when you have a new chief legal officer, there's often a new mandate. Well, maybe this mandate includes settlements. And I would want to know that as we're walking in the door, as we're talking to these clients. And that's why we think that planning out the next 6 months, planning out the year, developing an individual, whether it's a formal client plan or whether it's a casual plan with your client, but planning things out with your clients so you know exactly where they're headed, and you can kind of craft your message to know exactly how you should be pitching and positioning your staffing to accomplish this. Now, what are they going to settle? What are they going to be doing? So let's take a look at the different practices and where they're headed and how they're kind of structured in the marketplace. There's a lot here. We're going to cover some of these in detail, but let me give you a brief overview. Each individual circle that you're looking at is the market segment itself. So you've got private equity, IP litigation, regulatory. The size of that circle represents the amount of spending. So you can compare one to the other and see how big they are. Now, the array of circles, how they're placed, is based on two things. First is the growth in that spending. So the higher up the growth, the higher up it is on this chart. This line right here is roughly the zero growth line. So you can see how much they're growing by comparing things to this line, this horizontal line right here. This right here is the average market rate. So anything to the right of this is going to get a premium rate. Anything to the left, you're going to see a little bit of rate pressure, maybe more rate pressure. Now, I have to kind of give a disclaimer here. Just because clients are going to pay premium rates and are paying premium rates does not mean that they are going to stand up and say, here is whatever it is you want or demand. They are going to negotiate. They're going to negotiate hard. They want the best value they can get for their dollar from your firm. And remember that their caseload is going up by as much as 22%. I don't think anybody's going to get a 22% rate increase. So you've got to find a way to package up your services and negotiate to be able to get the premium rates that clients are paying or willing to pay. So as we look at this, you'll see that there's 4 quadrants. These here in the upper right, because here's that horizontal line, are what we call the priority practices. These have higher growth, these have higher rates. And you can see that's where the majority of the practices are, which is the first time it's looked like this in about 20 years. So one of the things that's surprising coming out of the pandemic is the amount of spending and growth that clients are expecting, barring any kind of catastrophe. We've got the opportunities down here, which are getting higher rates, but are not necessarily growing as quickly. We've got the tactical practices, which are growing, but rate pressure is still there. And then we've got what we call cornerstone, which are always going to be there. Corporate is starting to get some life because of ESG. So we expect that to head that way. Real estate looks like it may be having a little bit more life, so that's going to be interesting. But I'd like to talk about 2 things before we get deep into the practices. Bankruptcy and restructuring virtually doubled over the last roughly 13 months. So the growth isn't as great. We expect it to stay at these elevated levels. And that is, good for law firms, not necessarily good for the economy, but they're going to enjoy the growth that they had last year and stay at roughly the same size, which is why you're not seeing a lot of growth there, because the size of the market increased so much as we went through the pandemic. So let me talk to you a little bit about each individual practice. Cybersecurity, fastest growing practice. We get reports of some law firms with as many as 800 or 1,000 attorneys growing at 25% or more in this arena. Clients tell us that there is more supply or more demand than there is supply of attorneys. The way to get this work is kind of interesting. First of all, this is where digital marketing is really most effective. This group is very tapped into the digital market. They're tapped into thought leadership, and they're tapped into thought leadership that talks about what they call real adversarial experience. They want to know what happens when things go bad. They're hoping things don't, but they want to know what happens when things go bad, and then how to keep themselves in compliance with all these changing, sometimes conflicting and evolving rules that they face. If you can communicate those two things, you're going to get yourself a very interesting and interested audience. What clients tell us is, interestingly enough, 34% of them or so said that they get no active marketing or business development in cybersecurity, data privacy from their primary law firm. So everybody just take a minute and think about that. No active business development in the fastest growing segment on here. Now, maybe there's business development and they just don't see it. Maybe it's not catching their eye. If you're not a member of the IAPP, which is the Association for Privacy Professionals, it's going to be that much more difficult. These are your individual attorneys being members. It's going to be that much more difficult because that's a place where clients go to look. So if you're in that market and you're not an AIPP, then I would look into becoming a member immediately, because that is going to be critical. And put your thought leadership out there in multiple forms, in digital formats, so that they can read it and reach out to you. And if you're one of those firms not reaching out, reach out, because this market, this spending this is a long-term market and opportunity for you. M&A. M&A kind of ground to a halt for a few months and started coming back, and it's coming back a little bit more. It's kind of got a slow buildup, but the growth is pent-up demand, deals that were put on hold, deals that were germinating during the pandemic. And companies, clients, by and large, are starting to think that it's getting to be time again, barring a catastrophe. The way to get this business, most experienced clients that have experience in M&A have a panel of 7 to 8 firms, and they will divvy up the work by size of the deal, complexity, geographies, whether it's global, whether it's within the US, whether it's across the US. And the way to get business here is twofold. One is roughly about 22% will follow their partner. That's higher than the overall average, but they will follow their laterals, which is why I think you're seeing so much lateral activity. And the second is teaching them an intricacy, something they don't know about M&A, especially in today's environment. If you can do those two things, you've got yourself a captive audience. If you can't do those things and talk about the number of deals you've done and the volume of deals, clients just, they'll listen, but it's not going to break through that 7 to 8 firm panel that they have in place and that they rely on. Now, they are open, but you've got to have a compelling message, something they don't know. How do you find that one nugget that gets their attention? Because you could probably use that nugget in a number of places. And again, this is a place where we're going to see a lot of activity and pent-up demand. Class actions. Class actions are always interesting to me, because what happens is, if you look at this going back to the first time that we ever did this kind of analysis, what you'll find is that it started out, way down here, and through the years has come on up through here. and now is one of the absolute fastest growing practices that there is. Clients will hire the firm that first understands the business risk, because if you understand the business risk, you will understand the legal issues and you can do a better job for clients. What is the business risk? Well, some class actions, well, they just cost money. Others will threaten your very being. We're seeing growth in class action in social media, not surprising perhaps, and we're certainly seeing it in insurance. It's kind of interesting if you think about the insurance class actions. Part of the insurance industry is saying we're not worried. The other half is saying if this goes against us, it could decimate our balance sheets and their reserves. So there's other class actions that are coming up, but that are going to come out of the pandemic. But this is growing rapidly. Clients are kind of out there readjusting themselves to figure out how to manage these class actions. Again, leading with the business risk is a little bit more important than leading with your experience, and leading with taking the time to understand clients' inclination to settle. This is a place where settlement becomes an enormous issue. So if you can find some combination of business risk discussions, settlement discussions, that's going to make you sound different than virtually all the other law firms that are out there. Investigations. This is tremendous growth that we've seen. Again, if you have clients in the financial services industry that have handled a lot of PPP or CARES Act money, there's a high probability of investigation, high probability in healthcare as well, high probability in tech. The way to get the business here is really twofold. One is if you have a strong relationship, clients are going to look to your firm. If you don't have a strong relationship, or you're one of those brand new general counsel, because some of them have been brought in specifically to manage investigations because it's a small segment with a very big profile. They're going to either go with people with whom they have relationships. If not, brand starts to play a big role. Who are the rock stars? Who are the rock star firms? But a relationship still trumps. So looking to your best clients, talking to them about managing against these investigations will be key to getting this kind of work, and is often an entree to litigation work as well. Now I'm going to jump over to employment. Now, employment is growing rapidly. Some of employment is buried over in litigation, which is where clients will put it once it turns into full-blown litigation. But the main reason that you don't find higher rates in employment, although they have been slowly kind of moving in this direction, is the matters are still relatively small. Unless you're talking about a wage and hour class action, then that gets treated like a class action. So because they're smaller, it's harder to negotiate. It's harder to display the value. So this is one of the reasons we're seeing a real jump in the use of alternative providers, meaning that the labor firms especially are now using non-lawyer professionals, they're using consultants, they're using non-partner track attorneys, and really getting the cost down. We're also hearing about a lot of software tools to help predict where the regulations are going, where the regulations are. So in order to get this kind of business, education is key. What can you teach clients about what's happening, what's going to happen? And I would urge you to repeat this word to yourself 3 times. The word exclusion, exclusion, exclusion. How are they excluded from some of these regulations is worth its weight in gold or perhaps Bitcoin these days. Providing tools. A couple of law firms have developed some really good software products to help clients keep track of all the different regulations. When there's a new regulation, there's alerts, there's updates. And this is starting to separate some law firms from others. Immediate responsiveness is just essential here. The typical law firm, the typical client expects a response to a phone call or an email in 2 to 4 hours. That is shorter in employment because the risk can be so high. It can turn the wrong way. They get bad press. An agency finds something they don't like. Your trick here is educating, staying ahead, and always finding a way to be in communication, whether it's talking, whether it's software, whether it's emails. But if you're not telling your client what's going on in this marketplace, whether it's regulatory or whether it's things like how to return to work safely, it's going to be very difficult to compete without that kind of dialogue. And then finally, litigation, the biggest segment that accounts for about one of every $3 or so of the legal budget. This is not, it was kind of interesting because at the beginning of the pandemic, everybody said that there would be these enormous supply chain force majeure kinds of matters, which really haven't materialized yet. The courts have been closed, a lot of things have been deferred, and clients are so absorbed by employment, cybersecurity, and M&A that litigation is something that they're just as happy letting sit, although most don't want to defer it, but they're happy to go with the natural flow of the slowness of things. The other thing to think about is the spending looks something like this. You've got this giant swath of spending, which is going to the complex matters. And you've got this, which is going to the more everyday matters. And if you want to win the complex work, there's a couple things that are going to be key. One is, much like class actions, understanding the risk and communicating that you understand the risk. If you want to get the complex work, clients want to know what the strategy is when you pitch. They don't want to wait. They don't want to hire you and find out. They want to know, and they want to be part of the strategy. They want to be entangled in it. They want to have their pride of authorship in it. Even if it's the exact same thing that you propose, them being part of it is a difference between getting the work and just being another law firm. We're recommending to our clients that they start their pitches with questions about the matter, the risk, and the strategy that they want to take, because I know it's not true of anybody on this particular webinar, but there are many law firms out there that start their pitches with how many times they've gone to court, how many times they've gone to court to verdict, how many times they've won, what judges they've been in front of. And that's all great, except the clients want to know your strategy. So that is the real kind of differentiator, be able to get the complex work in where the higher rates are. And then there's going to be much more rate pressure on the everyday work, where you're going to see a lot of alternative fees. You're going to see a lot of alternative arrangements. You're going to see portfolio outsourcing because clients, again, can't manage the growing caseload as they move forward. Now, how is this going to play out? It's not going to play out evenly, as we've talked about. It's going to play out by industry. And you can see some industries and some practices, as you look at this chart, are very different than others. The bluish is the top growth prospects that are going to get premium rates. The dark gray is the opposite. That's where things are going to be especially slow, going to be especially hard, going to be extraordinarily rate sensitive. So if you look at this, we've got the practices running along the top, and we've got the industries running along the side. And to look at this, just a little bit of history, these industries that we track, we often are asked this question. We track them because they account for somewhere right around 80% of all legal spending in the United States. Now, these particular industries, out of the hundreds of industries that are out there, account for the enormously large proportion of spending. So one of the reasons the legal industry and law firms have been able to hold up and do pretty well during the pandemic is most of the work is with companies and industries that are doing pretty well in the pandemic, some of them benefiting, whether it be pharmaceutical, high tech, telecom, transportation would probably be the big exception, except for the trucking segment. But as you can look at it, if you look at cybersecurity, the fastest growing segment, they have 8 different industries where they're growing. If you look at class actions, they also have 8. So you've pretty much got, 2 big high rate areas where many times they're in the same industry, some not, but banking, healthcare, high tech, they overlap. And if you can show a team, if you can show how you can handle both of these, there might be a little bit of benefit there because class actions are going to come out of cybersecurity. So the ability to link those is going to be a real advantage. If you look at employment, employment has 6 areas where they're going to get premium rates. Litigation, despite the fact that it hasn't really ramped up yet, has 5 areas. So that's going to be a time when, when that does ramp up, it's going to even get larger. So, looking at the others by industry, healthcare has some of the most high need areas, as does high tech, as does pharma. And what it does is, again, emphasize we're in industries that are recovering faster and benefiting, targeting those industries with your BD dollars and the approaches that clients are going to respond to is kind of the key to success in this market, presuming, again, we don't have some kind of catastrophe. So what we now know is industries are probably playing the most important and influential factor than they've played in the last 20 years. Because if you're targeting an industry that doesn't have these high growth needs and these high rate needs, it's going to be harder and harder for those law firms to grow. Now, we're not saying abandon the other industries. What we're saying is, if you've got incremental dollars, if you're setting your priorities, if your partners are coming, your leadership is coming and saying, where are we going to grow? Where should we invest? These are the places that are going to have the highest payback. And if you look, cybersecurity, litigation, class actions, and probably a few others are going to have long-term and enduring results and payback. So the investments you make today are going to go well beyond the pandemic because we don't expect at all these areas to go away no matter what happens with the economy. Those are going to be here to stay. So the good news for law firms, a lot of opportunity. It's segmented by industry, it's segmented by practices, but this is really just kind of an advanced step of where we were headed. The pandemic has had the effect of drawing us into where the industry, where law firms and where business development was headed anyway, as clients get so large and industry gets so large that they're just demanding that law firms understand them better than they do. So we've just come out of a crisis. And to quote Winston Churchill, never let a good crisis go to waste. So it's kind of interesting to watch and to see what law firms have done during this crisis. I mentioned this in my blog post from this morning, that some law firms are kind of holding their breath and really happy they're doing better than they thought, and others are investing like crazy. What is it that these firms did? What is it that their partners did? Well, their partners knew how to help, as crazy as that sounds. They knew what to do. They saw the situation, they acted, and they acted in a practical, tactical, realistic manner. So these are not the partners where the firms, and somebody called up a client, or actually very few people called, sent an email and said, how can we help? How can we help? As one general counsel said to me, I don't have time to think about how you can help me. I am working with people who already know how to help me. So they're setting up client task forces. They started doing this in the beginning of the pandemic. They're still doing it now. Clients really want them. They laid out actionable things for clients to do, like segregating client emails to all employees and help them with client communication. Most importantly, if I were going to say one thing, it would be right here. They're sharing ideas. They're going out to their clients and they're saying, look, this is what I heard. Is this working for you? What did you hear? And the great thing about sharing an idea is you're going to get an idea back. And then you can share that back again, and you create this enormously valuable set of communication where you always have new things to say to your clients. And I also would say to you, if you're going to do one thing, well, what I would recommend is pick up the telephone. I don't care if it's an office phone. I don't care if it's an iPhone, a dial phone. Pick up the phone. Not email, not text. Why am I talking about the telephone? Well, our research shows that only 21% of clients said they got real, meaningful, personal telephone-based communications. And these are the people that really, really did well. 79% got emails. If you want to stand out, teach your partners, other partners, everyone in your firm the lost art of talking by the telephone, because this is what's making a difference, as old-fashioned as it might sound. So I'd like to leave you with 5 thoughts. This is what clients want now. This is what is winning the business now. This is what is creating the relationships right now. Number 1 is early engagement. Clients want to know what you're thinking, what you're doing before they're going to hire you. They want to know your deepest, darkest, most insightful approach to their problem, and they want to be part of it. That's kind of the same thing as, not quite the same, but a very early assessment. We have at least a couple GCs that say they now give their law firms 30 days or less to assess the situation, facts or no facts. This one, stop and think about a minute, because at least 40% of clients want more associates. Another 40% don't. There's only one way to know, and that's to ask them. Because if you bid associates or you don't bid associates, then you might be setting yourself up. There's at least a 40% chance that you are on the wrong side of that equation. Sharing new ideas, clients, I've never seen this kind of thirst for new ideas. They want to know, they feel like they're in brand new territory. Remember, 30% of them are new. So they're really looking for ideas on their situations. If you've got a new client in place that is new in tenure, go and share an idea that's going to help them be successful in their new role. And then finally, I've said telephone many times, but any ongoing, meaningful personal communication, especially with the 30% that are new. They want to hear from you. And the ones that are leaving, they are looking for opportunity, passively, actively, but statistically it shows that they're on the prowl. So a lot of opportunity, a lot of kind of blocking and tackling kind of tactics are working, and we're focusing on that with our clients. We're seeing it be tremendously successful. I am, kind of smiling in one way because I was pleased at the level of opportunity despite the pandemic, but at the same time, we're still in the pandemic and hopefully we're coming out of it soon. But let's focus on the opportunity, what everybody on this call can do, because if you look at each one of these tactics, if you only have one partner do it with one client, you've made an enormous impact. None of these things require changes to infrastructure, technology, because everybody's got a phone, everybody knows how to share ideas with each other, and then share those ideas with clients and really get the idea velocity going. So a lot of opportunity, both internally and externally. And I would like to welcome any kind of conversation, comments, thoughts about whether it be about this presentation, whether it be about client feedback, whether it's the things you're talking about doing. We're happy to communicate. We like the telephone. So my telephone number is there, as is my email. I'm equally comfortable in both. So thank you again so much for your attention. We look forward to your questions. Be well, be healthy.